Good evening, everybody. Thank you very much for joining in. This side, Rahul Magan here is the CEO of Treasury Consulting LLP, and today we are going to speak about a topic which is known as the technical analysis of GBP. As you very well understand that things are not going good for the GBP, especially in the sense there are a lot of talks which are going in the market regarding the hard Brexit, that Britain is going to be landed in a very harder way, and thank you to the flash crash that has happened in the GBP, which led to a decrease in the value of the GBP by more than 6 big figures at a very same time. So in that regards, things are changing little faster, and Of course, this is not. This is not a good thing that it is not a good sign that markets are taking it in a negative way, but still, nonetheless, we cannot do. GBP is doing at a GBP is not doing good. Now, if we carefully see it, if you carefully look at the chart, then you will get to know that sitting today GBP is trading approximately 1.2143. 1.2143 is not a level where GBP should be traded, because if you carefully see that till few trading sessions ago, few days ago, GBP was trading at approximately 1.30 levels, and today it is trading at 1.21 levels. I am not saying that flash crash has not participated in that. Yes, flash crash participated in that, and in my personal opinion, that flash crash give a I would say flash crash give an option to the traders to go ahead and do anything, to be very honest. Now, what I wanted to say here is that things are moving in a little messy direction for GBP. Things are moving in a little messy direction for the GBP because of the fact that GBP is trading at 1.21 levels. Now, if you carefully see the chart, this part is the flash crash. This part is the flash crash. Here when GBP was trading, this is the complete slowdown. This is where when GBP was trading at roughly 1.30, and it all of a sudden it went down to, okay, this part is this Brexit period. This is a flash crash. My mistake. So we have this chart right up front, right in front of us. So what we are going to do, we are going to create a technical analysis on this, and we will create MACD forest on this. If you carefully see that I have created a chart only for 1 year period. Deliberately for 1 year period chart has been created, and the input parameters of MACD has been kept as a standard, right? So what we did, if you carefully see that all the green parts which you getting, all the green parts are basically suggesting that you should sell, and all the red parts are suggesting that you should buy. This is MACD forest which we are taking into consideration on the 1 year GBP dollar chart. Now, if you see here, then the same which is sitting today when GBP is trading 1.2143, then you would get to know that then you would get to know that GBP might go to 1.20. Now, when we earlier presented our topic, we had a view that people from the US would come forward, and people from the US would come forward, especially the hedge funds will come forward, and what they do, they will try and buy GBP. But since the talks of the high Brexit, basically the hard landing Brexit is on the way, so I strongly doubt that the hedge funds would come and try and take GBP at a higher level. So hedge funds would come and they will take the GBP they might take the GBP further lower. So if we see right up front, we will get to know that GBP might fall to 1.20 level. I was reading a variety of research report, and I get to know that the banks are expecting that GBP might move to 1.18, maybe a testing or maybe a support, which GBP is maintaining. You must be surprised that GBP is currently trading at 1.21, and I'm saying that it will move to 1.18. The reason is that GBP is a currency which can swing by the swing of few big figures for GBP is nothing. Even in the flash crash that has happened, it swing by almost 6 big figures. So swinging of few big figures is nothing. My personal opinion when it comes to, I would say, when it comes to the GBP is that all the traders should take this into serious consideration. Indian IT companies is going to take a double digit hit when it comes to GBP, because one side they have 38 to 39% exposure in the GBP, and second side they 30 to 38% exposure in the Europe, and second side they are facing a lot of visa issues due to this BREXIT that has recently happened, and their costs are getting rising. I think especially TCS, in my personal opinion, TCS, where a majority of the workforce has been on the on-site, so they are going to take a drastic hit in that regards. I'm not sure how the things would move for for GBP, but nonetheless, this is something which is a serious cause of concern, and this is something which we need to consider, and which we need to see. Now with this MACD, let us create a chart which is relative strength index. Relative strength index. Now if you now look at this chart, here, I deliberately pointing here. This is not less than 30, because if it is less than 30, then you need to sell. If it is greater than 70, then you need to buy. Of course, you can change 70-30, but generally speaking, people are computing using that transition. Now, what we are going to do here, we will see that the sitting today, it is approximately 30 point something, 30.27 or all. It clearly suggests that things are on the seller side for the GBP. And my personal opinion is that today we are sitting on 11th of October, right? And 11th of October, and which is Tuesday. So we have Wednesday, Thursday and Friday, which are the 3 trading days that are with us. So Wednesday, Thursday, Friday, if in the next 3 trading days GBP would lost say 4 big figures, so from 1.21 to 1.44 big figures means 1.71, then it means things would be, I would say, away from GBP. I would say people was expecting that euro to get down. It is strangely that GBP is falling down, and Indian IT company would lose a very considerable amount in that. And also I would like to stress the fact that I'm not sure whether the shorts, whether the long have already considering stop loss, or they have already utilized their stop losses. I'm not sure about that, but one thing which I'm sure is that all those who bought, they have a stop loss, right? And they will wait for a period. I'm not sure whether they have utilized these stop losses or not, but they have a period. But if they're going to wait for more, then there would be panic cancellation, and that panic cancellation would create a scene in the market, as simple as that. And if this would happen, things would be very, very messy. Before winding up this video, we would like to take you to one important aspect of the technical analysis, which is Bollinger Bands. Here we go. Now in this Bollinger Bands, you can clearly see that the width here. The width of this band is very high, and you see the width here. The width of the Bollinger Bands is very high. We all know that Bollinger Bands is a technique which is computing the volatility of the chart by having 3 levels, which is you have the medium line, which is which you are calculating using your rolling moving average, and then you have the upper line, which you have the lower line. Here we are taking 20 day moving average. You can see here very well, and with the upper +2 standard deviation, with the minor -2 standard deviation. If you want, you can change it. Suppose I'm changing this to I'll change this to 15 day. Yeah, I'll change this to 17, and here I change to 1 standard deviation on the upper side and -1 standard deviation on the lower side. You can very well see that chart is not been able to make a sense. So the chart is completely not matching up the volatility of the chart. But if you really wanted to match the volatility of the chart, then you need to increase to, you can take it 17, but here you need to increase to 2, and here you increase to -2, and you would get to know that the chart is making lot of sense for you. It covers the entire volatility, and if we see here, which is the chart, we can clearly make up a sense that the volatile days of the GBP are not very far. As simple as that. And if this would continue, things would be little messy for GBP, and GBP might lose a considerable portion to 1.17 to maybe below 1.17. And if this would happen, then only one thing which would happen, which is panic selling. People will come and sell, because of course, and the only hit would be a person who is a GBP exporter, because he is a person who will not only lose the money but a considerable amount of money. So we would like to thank you very much for that, and hope you understood this video and the gravity of the situation, that GBP is seriously moving into a negative direction. We would like to thank you very much, and we are bringing our website tomorrow, or probably if not tomorrow, then day after. And with this, we are starting a new journey of our life, and we are also scheduled to cross more than 200 videos on the YouTube. We thank you very much, and hope to see you soon. We will. Thank you. This side Rahul here from Treasury Consulting.